following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Option Block. Who's this voice? It is not Mark Longo, and you're saying, oh, this is like, it's like angels singing to me. The beauty of that voice. Yes, it's me, Mark Sebastian, your favorite option trader from OptionPit.com. And this is going to be a special option block because you've got me hosting, me being the main commentator, and me basically running the show. We are going to have a special guest and joining me, and he's a real good friend of mine. I'm going to introduce him now. We'll get to interviewing him in a little bit. But I want to welcome to the show David Peltier. He is the portfolio manager of Stocks Under 10. Welcome to the show, David.
Thanks for having me, Mark. Really looking forward to it.
Yeah, thank you so much. And now that we've gotten our introductions out of the way, let's get into the trading block.
The trading block.
And welcome to the trading block. This is the section of the show where we talk about what's going on in the market. And David, if you're the president of the United States, you're the POTUS, you're really happy about being elected, but this market isn't making you so happy, is it?
No, not so much. In fact, I think a lot of people forget, but after the election in 2008, I think we were down like 5% that first day. So it could always be worse, but it's a tough few days of trading, to say the least.
Yeah. So, I mean, what do you contribute this to? I mean, there are people talking taxes, there are people talking fiscal, the fiscal cliff. I mean, what are your thoughts on why we're having such a rough time?
For me, it's really hard to pin it down on one thing. All those things you just mentioned are very likely reasons we could be down. But when I look at the market as a whole, I see a market that's still close to all-time highs. But when I look at the strength of the underlying earnings, the underlying companies that make up these indices, they're not at all-time highs. So I think it's a healthy pullback. And in some cases, I'm using money to put to work. But I don't think you can go out there and just buy everything right now.
No, I kind of agree. So it's definitely a stock picker's market. I mean, if you consider the 20% sell-off that Apple has had and the fact that the market is only off about 6%, I think that's pretty impressive. And considering what's ahead of us, what's the market up on the year right now, David? It's up close to 10% still, right?
About 10% on the S&P. I think it's about only 6 on the Dow right now, but it's still a good year by any measure.
Yeah, I mean, think about that. Well, I mean, Apple's up 38% as well, I guess, if you think about it. But we're still up 10%, and we had an election year. We've got a fiscal cliff heading toward us. We have, a who knows what tax policy. And we've got the market really kind of holding up. Now, even more interesting is, and this is, on the option side is this VIX. We're off 10 handles today in the S&Ps right now, and we're actually seeing the VIX at the lows of the day. It's off 0.9%, or 0.9 of a point, and the VIX is 1%. So we've got the VIX at the low of the day and the S&Ps at the low of the day. One thing that we know is on a down market, when we see the VIX selling off, that is almost always a call of some sort of bottom. And, maybe that's kind of what we're seeing today. I mean, we've had a nice sell-off. Maybe we catch a little bit of a break here and actually get a relief rally in the morning. I'm not much of a technical analyst. I don't know. I forget, David, do you do a lot of the tech looking stuff?
Not primarily, but especially in the low dollar space, you definitely have to understand the charts because a lot of folks are trading the stocks.
Yeah. Do you know if there are any major significant levels in the S&Ps that we're looking at? I know we're right at that 200-day moving average, right?
Yeah. If I did get them, I'd just be stealing them from someone else. So
yeah. You know what? The 200-day moving average is 1380, and the S&Ps are trading 1385, and we're looking at the VIX selling off. So, we've got this looming fiscal cliff. There are a lot of people scared to buy equities. Where I am seeing strength is in what I like to call inelastic demand, inflation-sensitive assets. So, for instance, GLD is up $1.50 today. If you look at corn and soy, while neither of them are up, neither of them are really down. They're both holding pretty firm. And let me double check wheat. Some of those assets are really holding up. Whereas, I'll tell you where wheat is in a second here, folks. Wheat's actually up on the day. So you've got kind of these interest rate sensitive, you've got inflation sensitive, but not demand centric indexes or assets rallying pretty significantly today. I know that's, again, not really your focus of expertise, but what do you contribute to? Is that just all a bet on Fed policy?
I think that's part of it, knowing that you're going to have that put and really see some reflation across the board. But it's interesting to see, especially in gold. I've had a large gold holding for a while now, and I actually took some off the table today in one of my miners, something maybe we can talk about a little bit later. Mm-hmm. But I think you're seeing some real, especially when you talk about the energy commodities. I think in oil and natural gas, we've seen some levels that I just don't think there's much downside from here. And if you're certainly not putting money to work into stocks, in fact, you're seeing a lot of money come out of the market in stocks. I think people are moving to some of these more tangible assets, even if it's just for a trade, even if it's for just to take the money out of somewhere and put it somewhere else.
Yeah, I actually couldn't agree with you more. And, I do want to hear a lot more about your picks and your different stocks, but I think we need to hear about kind of what you do first. So with that, let's kind of roll out of the trading block, and we're going to roll right into the interview block.
The interview block.
And welcome to the interview block. This is the section of the show where we interview people. It's a little self-explanatory, I suppose. I love the way Mark always says this is the section of the show where, I feel like some of these segments do introduce themselves pretty well. But with that, let's talk to our guest, David Peltier. David, why don't you tell us a little bit about yourself?
Sure, a little bit about me. I'm a portfolio manager here at the Street. I've been here for almost 12 years now. When I first came here, I was Jim Cramer's only research assistant. And we've built quite a team. I have quite a few stories, maybe for a different show. But it's been a really good time. And right now I work primarily in the stocks under 10 space. But mostly small caps, but there are multi-billion-dollar companies that are in my universe. So I'm a generalist at heart in that I look at all kinds of sectors, even look at dividend stocks. I have 4 or 5 of them in my portfolio of 22 companies. So even the smaller names do pay dividends as well.
Really? So talk to us about the stocks under 10 portfolio that you manage.
Sure. Well, it's a model portfolio. We have anywhere from 20 to 25 companies. Again, just like this segment, it's a pretty self-explanatory product. We look at stocks that trade under $10 or so. I sold one today that was at 20. That's a good thing. That means I was buying it at much lower levels. But
wow.
Like I said, we're generalists. I have 5 companies reporting in the next 24 hours. Anything from a biotech company to a company that makes movie screens, or to a couple energy plays. So we're looking at stocks across all the sectors, and we are trading bias, but at the same time, we're fundamental stock pickers. We're buying stocks for the next couple months, if not the next couple years. So when I see a pullback like we've seen in the market the last 2 days, I have cash on the sidelines, and I'm looking to put some of it to work. But you have to be careful. Just because a stock's cheap doesn't mean it's going to move higher. You need a stock to be cheap and have some potential catalyst. Otherwise, it's a potential value trap.
Yeah. So talk to us a little bit about how you do that evaluation process. Someone looks at it, it's a $3 stock. You've got Groupon that's now a $3 stock, and Orbit's Worldwide that are $3 stock. And then you've got some of your gold plays. So, there are so many, how many newsletters are there out there that pitch penny stocks and dirt cheap stocks? Or you'll get like those phishing emails that say, oh, this is some company. It could be Google, Apple, and Amazon in one, something like that. How do you differentiate the good from the bad in the inexpensive stock space?
Sure. Well, a lot of those other firms get long, then loud. We try to help the subscriber make money, the reader out there make money. Mm-hmm. So first of all, we look at the balance sheets. Really, just not even just the financial statements. Look at the balance sheet. You talk about a company like Groupon, some of these other social media plays. A stock like Zynga actually had a bottom at some point because they have over $1 billion of cash on the balance sheet. It's hard to imagine that Zynga's even worth $1 billion.
Right.
But with that real asset, the stock does have a floor.
Right.
But the key for us, and what a lot of individuals out there who subscribe to us, and frankly, what a lot of other folks in the business don't take the time to do, is we call management. We talk to management. Being in New York helps. A lot of these management companies come through town all the time. But getting that extra access, getting that extra, being able to peel back that extra layer of the onion, I think gives us a real advantage. What you're going to find throughout most of Wall Street is that there are thousands of stocks out there, but the big firms don't focus on these small cap stocks. And so a lot of these times you'll see a stock trade 10%, 20% lower than where it should be, just because no one's paying attention. So we go through and we screen for those companies. We find those ones with good fundamentals, with potential news on the horizon, and can often get in ahead of the herd. And so that's where we make our money. We can make that 20 to 30% before the rest of Wall Street even takes notice.
Yeah. So are there any kind of stocks that you're looking at right now that are on your radar that you think are interesting, that what are you looking at and why?
Sure. Well, I'll tell you right now, I have a company that's reporting tomorrow. Company's Ballantine Strong, ticker BTN, B for boy. Mm-hmm. And, the key here is that the stock's trading below its tangible book value. It's trading about 20% discount to tangible book right now.
Yeah. Now, do you want to briefly explain tangible book?
You bet. This is something, it's very simple to understand. It really is Wall Street gibberish, but it's a very simple term. When you look at a company's balance sheet, at the very bottom, you get shareholders' equity. It's usually the very last line of the balance sheet. And so basically, book value is what that shareholders' equity is. You take all the assets, cash, inventory, whatnot, subtract all the liabilities, which is just debt, other bills you owe, and what you're left with is shareholders' equity. Now, for decades, this isn't something I invented. This long before either Mark or I were even a twinkle, people have been using tangible book value as a floor for a stock price. What makes the book value tangible is if you strip out any assets like goodwill or other intangible assets. So basically, if a company has shareholders' equity of $10 per share, and especially if it's profitable, the stock should very rarely, if ever, go below $10. Something like a net asset value if you look at a closed-end mutual fund. So right now, Ballantine has a lot of cash in the balance sheet, no debt. They're making money. They're profitable. Yet the stock has fallen below that tangible book. And I think, especially in my space, a lot of these names have been oversold. As we got to the end of October, you had the end of the mutual fund fiscal year. So a lot of these names went off the books, especially if they were a bit of a loser. And I think the stock's just way too oversold right now. I think you can make that 20% by the end of the year. And if the company continues to do well, they put out a good number tomorrow, it can move even higher than the $4 it is right now.
Oh, wow. Well, looking at, I'll just add a little option twist to that. It's certainly not an active option name, but there is some open interest on the March 5 calls at varying prices. I look at the chart here, and what caused it to have such a kind of a rough trip down in this BTN that's Ballantine of Omaha. Personally, big fan of anything in Nebraska. What caused it to kind of have this big rough stretch from let's say 6 down to this $4 level?
The results, frankly, have been choppy. The companies will put together a good quarter or two, and then they'll have a bad one. And I think people just kind of gave up with the inconsistency. But the company is profitable. The company is worth a lot more than it's currently trading at right now. And there's a real beneficial need. There are mandates for movie theaters to go digital by the end of this year. And even if that's not a hard and fast deadline, what this company does, their technology, they make the screens. When you have an IMAX theater and you need a fancier screen to produce it, they make those screens. If you want to upgrade your older projector technology to more digital technology, this is the company that helps you do it. And
oh, wow.
Frankly, they have quite a large, there's not like hundreds of competitors in this market. There's not thousands of competitors in this market. They have very large share and are growing across the globe.
Okay. That's cool. Yeah, we saw not a lot of activity today. We did see, it looks like somebody bought the December 5 calls for 10 cents. Not a bad little bet if you think earnings are going to be good. Any other names that you're looking at or are on your radar? Or maybe how about a name that has done well recently that you recently flipped? You were just telling us about that stock that you dumped for $20.
Sure. Well, that was Yamana Gold, ticker AUY. It's a stock we've bought in various times well below $10, but it's been a very good holding for us. What I really like about Yamana isn't necessarily the fact they're a gold producer. Obviously, that's a big part of the story. The reason why I like Yamana is because they're growing faster than their peers. Anytime you can get any stock in an industry that's growing faster than its peers, if that's a retailer, that means they're taking market share. So basically, Yamana is taking market share from its competitors. They're growing production 20, 30% a year when most of these other larger companies are struggle to put double-digit numbers. On top of that, gold is obviously doing very well. I think well north of 1,700 and the companies they deliver quarter in, quarter out. They put a production estimate out there and they hit it. They pay a nice dividend even.
Okay.
It's a very solid holding and one it's not up just because the price of gold. You'd mentioned before, market's down 6%, Apple's down 20%.
Right.
I think you can explain the big move in Yamana. It's more than half is because Yamana's doing well, not the price of gold itself has gone up.
Oh, wow. Okay. We talk about winners all the time. Any kind of anytime you've been caught where you're like, wow, I was wrong there. Any maybe lessons that you've learned in your days in terms of trading some of this stuff?
Well, I certainly had a couple stinkers. We all had it in our past.
Right.
I had a couple back in July. One because it turned out the company was fraudulent.
Oh. And
that's not always something you can sniff out. As much work as you can do, that's not always something you can sniff out. But I think the key is to, and I had another one where frankly management just didn't live up to their expectations. Mm-hmm. One of the two things I mentioned when we had talked about what I do and how that's different from everyone else is if you have any access to management, even if it's just listening to the quarterly conference call or attending the annual meeting, or you can do a lot of this online right now. Mm-hmm. It definitely pays to find a management team that you're comfortable with. I had someone write into me the other day that the stock that I own that I like very much, and they said, I listened to the conference call and it bothered me that the management team, they sounded too promotional, it sounded too salesy. And this was the person's opinion, but I think if you find a situation where for whatever reason you're not comfortable with the management team, mm-hmm. it's a $50 stock or a $5 stock, I think you should move on to the next one. I think that's a good lesson to learn. And everyone has a different way of gauging that. But I think you should, at the end of the day, you're investing in the management team first and foremost. It doesn't ultimately matter what the company does if management can't help the business grow.
Love it. Yeah, well, that's just fascinating, and that's why I like working with you. You and I have done a couple of things. If somebody is interested in stocks under 10, how do they get a hold of you? Where do they go? Can they sample it before they buy it? Give us kind of the, I'm going to give us your plug for, let's just say.
I'll give you my elevator pitch.
All right.
First of all, you can check us out. We're at this www.thestreet.com. Very easy to find the Stocks Under 10 newsletter through that website. Also, you can email me directly. We do have a 14-day free trial. The best way to probably get a hold of me is emailing me. It's david.peltier@thestreet.com. That's Peltier. And also follow me on Twitter. Mark Sebastian's one heck of a Twitter follow, but might want to check me out too. It's at David S. Peltier. But yeah, you can check out the newsletter free for 14 days. It's soft trial. Don't even need to give us a credit card. And if you like what you see, feel free to contact me and we can sign you up for it.
Yeah, and I will agree with you on the Twitter thing. I only follow about 40 some odd people, and you're one of the ones I follow, and there's a good reason for that.
Very honored. Thank you.
Yeah, well, you should be. Ha! So, David, with that, let's move out of the interview block and move into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
And welcome to the Odd Block. And if you don't know what the Odd Block is, you're about to figure it out. So, because you're the Stocks Under 10 guy, I went through my list of stocks and things and found 3 different stocks with unusual activity that are all trading under $10. And the first one is Harmony Gold, HMY. We had a customer sell, I'm going to pull this up here now, folks. HMY. We had a customer sell about 6,500 of the January 13 10 calls at 20 cents. Now, I didn't see a stock buy there, but I'm guessing that is probably as a part of a long position where they probably own the stock and are selling the 10 calls for some premium. Now, Harmony Gold, you were in Yamana. What are your thoughts on Harmony Gold?
You're right. I am in Yamana, and at the end of the day, I think it's the best one, especially in the smaller cap space. But when you look at Harmony, it's a stock that's been really kind of down on its luck, and it's gotten a bit of a bounce here, and it kind of looks like it wants to go higher. I still have a feeling that we haven't seen the peak in gold prices yet, and there are different ways to play it. Maybe you take something out of a Yamana, which has been a good performer, and something like Harmony that kind of looks like it's poised to maybe go through 9 from here in the short term, if not up towards 10 over the next couple of months. Yeah,
I mean, you just don't know, and that's probably I'm almost certain that's a part of an existing long position, and if that's the case, then that's pretty bullish the stock. That would imply it's going to pick up almost, call it 15% from here between now and January 2013, or the guy's going to keep his 20 cents. You're right; it's had a nice pop over the last 2 days, so that's possibly the guy was timing his call sale. All right, our next stock, and Mark, the regular host, and I, we love these cheap stocks, just especially ones where, you get these crazy people buying calls or selling calls. The next one is XCO. That's EXCO, and I believe it's Exco Resources Inc. They're a natural gas company, and we had a customer come in, and he bought the December 7 calls and the December 8 calls in what we call a call stupid. So what that means is he first bought a bunch of the 7 calls, And then to make matters better, it looks like he bought the 8 calls with it. So it's a quick way of getting a lot of cheap deltas. You know anything about XCO or the natural gas space?
I
David?
do actually. XCO is definitely one of the more interesting spaces in 2012, especially in the low dollar space, has been these natural gas stocks, because the price of the underlying commodities just made crazy swings. We went below $2 for a while, then we quickly went back above $3. So a lot of these stocks have been very actively traded, and I would say that XCO is definitely one that's very popular with the day and swing trader crowd. So you're definitely going to see a lot of action in this stock, just as we've seen it pull back from, say, 9 to about 770 right now. I have a couple names myself that I prefer that are a little cheaper in the space, and I think XCO is a little bit of a wildcatter, but it's a good trading vehicle. And so if you think, like on a day like this where stocks are down, it seems like everything's down, but natural gas and oil are up, this is a stock where you can definitely trade it and make some money. And before you blink, it can move 5-10%.
Oh, wow. Okay. So this is a mover and a shaker. So you think this call stupid was absolutely could have been a swing trade. You know, if you want to get along a lot of cheap deltas, probably a great way to play it is this the call stupid.
I absolutely do, because there's a lot. I know personally quite a few traders that are involved in this name.
Oh, yeah.
And wouldn't be surprised, to see someone making a big swing at this.
Yeah. Well, and over the last 3 months, here's what I'll tell you. Over the last year, this vol is not that high. But if you look at the last 3 months, the implied volatility of the options is at the highest level that we've seen since the July-August timeframe. So that'll tell you there's some serious option buying going on in this stock right now. And our last one is GGB. All right, that's Golf Bravo, or Gerdau SA. Now, what Gerdau SA, formerly Companhia Siderúrgica de Guabanara, is a Brazil-based holding company engaged in the manufacturing and sale of steel product. So this is a Brazilian steel product. So I'm assuming Gerdau is that's probably Portuguese of some kind. And this is another fun one where, the stocks had a bit of a rough stretch here. And we had somebody come in and buy a nice chunk of the June 2013 9 and 8 puts. We had a buyer of 2,000 of the 8 puts and 5,100 of the 9 puts. Any thoughts on this one, David?
Well, first of all, kudos on the pronunciation and the accent. I almost felt like I was in Rio. But
well, I'm known for my Portuguese. I don't know if you knew that.
I'll bet. So all 3 names we've talked about today are commodity or materials in some way, shape, or form. We talked about a gold stock, talked about a natural gas stock. Steel is the one area, though, in this cohort that really bothers me, and that's because in natural gas, at least, you can see the domestic demand. Steel, you really need to see the benefit of the growth of the rest of the world, and we're just not seeing that right now. It is possible that with a new regime coming in China, you could start to see some higher demand and some more growth in these areas. But that's one of the reasons why not a big fan of GGB, just like even though the coal stocks became so oversold and so cheap. I was taking a look at ACI, Arch Coal, and Alpha Natural ANR. It's tough to treat these as anything more than a short-term trade. I would have loved to have just closed my eyes and bought them, but it's the fear of the global demand.
Yeah.
Just slowing everywhere. It's frankly slowing everywhere. And it's really hard to get behind a company that is pure commodity like this.
Yeah, another one that had a lot of odd volume was JRCC, which is James River Coal Company, and they're another one that we saw the coal. Coal's a tough one because we saw coal catch a big rally when it looked like Romney had a shot at the presidency, and since that, coal and gold have almost moved opposite of each other. When it looked like Romney had a shot at the presidency, we saw. Whether probably not true, But whether he liked it or not, Romney was presenting himself as at least a stronger dollar president. And I don't think anybody can argue that our current president is anything beyond a weak dollar president. And then you also had Romney talking, we need to use coal, and President Obama, who pretty much is not a big fan of coal. So we saw the two of them really move opposite of each other. But so that's our, we went through the odd block there. So we'll move out of the odd block and let's move into around the block.
Around the block.
And welcome to Around the Block. This is where we're going to kind of talk about what we're looking at and what we think might happen. Obviously, tomorrow we've got a few little economic things, but actually not a lot of economic data for some time. I'm looking at the economic calendar for next week, and it's we got FOMC minutes, retail sales, and a few things, but really not a lot of economic data. I guess Philly Fed is on the 15th is the next major piece of economic data we have. So, David, is there anything you're really watching out for in the next week or two?
Well, I think we have a different perspective out here in New York than the folks in the Midwest, just because the last 2 weeks have been so crazy. Mm-hmm. Whether or not you were directly affected by the tragic storm, just even getting 3 or 4 inches of snow on Wednesday normally doesn't shut down New York City. But right. It was a really scary event, and the psyche and the infrastructure is so weak right now that even just that small snowstorm, caused almost everything to shut down. Mm-hmm. I think what we're most looking forward to in the next week or two is, with earnings season officially wrapping up this week, is we don't mind, a lot of us out here, that things might be a little slower on the economic front. We now have the election past us. Life may soon start, or just our daily lives may soon start to be getting back to normal. Mm-hmm. So I'm looking forward to this period, say in the next week or two before the holiday week. This will be a great chance, especially given this sell-off, that I'm going to be digging in and looking for some new stocks to buy.
Nice. I
do have some cash, and I'm not just going to close my eyes and buy, but I'm actually really looking forward to, having heat and electricity and water and in an office to work out.
Right.
So it's definitely been a nutty experience, and the volatility is felt even more, I would say, for a lot of us, just because of the volatility in our own personal lives.
Right. Well, I can't imagine what it's. I remember I was in New York during September 11th, and I remember kind of what that was like. Natural disaster kind of puts everything into perspective. September 11th shut down part of Lower Manhattan, but the city actually still worked. You guys were actually in a situation where basically the financial capital of the world could not work or operate, which shows you where we need more redundancy. Any thoughts on the fiscal cliff? And, we heard statements from the president, John Boehner. How do you think things are going to play out in the market with the fiscal cliff coming up at the end of the next month?
Well, I truly believe that the fiscal cliff, as far as the market's concerned, as far as the stock market's concerned, will be a non-event. I remember the first time when we were talking about getting government stimulus, and I don't know if you remember, but the first stimulus bill actually failed. Mm-hmm. And no one expected that to happen, and the market went nuts. I think at the end of the day, it doesn't matter how they do it, how they bridge it. It's going to be a bit of a non-event in the market. It may cause some near-term volatility, just like when you said Romney's moving up in the poll and the coal stocks will go up. You may see some of that, but I think it's going to be muted in general. I think whatever needs to get done will get done. Mm-hmm. And at the end of the day, what scares me a little bit more, and something that you had talked about, was some of these capital gains taxes, the dividend tax. Mm-hmm. If that actually goes, you've seen a lot of companies pay dividends that never paid dividends before, whether it's in technology, whether just seeing some of the smaller cap stocks start to pay dividends, seeing in my universe. I think that could make a big hit, and I think you could see a lot of these names pull back. They've gotten quite a bit of a premium. Utilities have done very well this year. could see a big hit.
Yeah, one thing I'll say is, I think that capital gains, I'm less concerned about capital gains going up, but dividends going to ordinary income, I think would be disastrous for the market. I'd like to see them come to some compromise where maybe you raise capital gains, maybe you adjust dividends. You can hear the L going off behind me. Maybe you adjust dividends a little bit, but I think moving dividends back into ordinary income would just be absolutely disastrous for the stock market. And, I'm really hoping that that's not an area the president is kind of dead set on. I think everybody can live with carried interest being moved to ordinary income. I don't think people want to see dividends move to ordinary income. I think that would be a real disaster. So I'm with you there. I agree with you on the fiscal cliff. I think Boehner and Obama have already positioned themselves to reach an agreement that they both can live with. If the president is smart, he'll look over the numbers and recognize what the reason he was reelected was not for economics. All right. People said to themselves, basically, we don't think that you'll do damage enough to the economics that we can't vote for you on social. And what I really think buried Mitt Romney was his social issue stance on immigration. And if we carved out immigration as a debate topic, the president probably gets trounced. And if he's smart enough to look at why people voted for him and why people voted for certain senators and why the Republicans actually picked up a seat or two in the House of Representatives, I think that that puzzle comes together that we don't want a crazy adjustment on tax policy. We want a solution. He does have a mandate, but that mandate is to fix immigration reform, to fix immigration and reform immigration. And, maybe some of the other social issues that are maybe less at the forefront. I think there's a mandate for some of that. I think they wanted, if American people could have had their way, they would have had Romney running the economy and Obama picking the next Supreme Court justice. What do you think about that, David?
No, I totally agree. And that's, we could debate the faults of the two-party system for the next 3 hours. But at the end of the day, I tend to lean more Republican than Democrat because I have to pick between the two. Mm-hmm. Reasons I do that are more financial.
Yep.
And at the end of the day, it's the what are the lesser of the two evils.
Yep.
I absolutely agree that what we need to do as a country to improve the economy and to improve our general well-being is to create new jobs.
Yep.
And frankly, a lot of the jobs have been created in the last several years, not going to say 4 years, but in the last several years have been lower quality jobs.
Yep.
Sure, jobs are being created, but you see people, whether it's in the financial world or other technically more high-skilled, more high-paying jobs, they're disappearing. Mm-hmm. It's not just automation. They're frankly just disappearing, and they're not being recreated in areas outside of what, say, maybe natural gas,
fracking, some of that stuff, and
just understandably controversial.
Right.
There really aren't very many jobs being created that pay when you look at the cost of everything else is rising. So it's very frustrating, and it's hard to see how we get out of it without real effort being put in that.
I agree. And the first step is we can have these two parties. We can have Boehner and Obama, who the good news is actually seem to like each other, sit down and really solve if I think the first major step is, and I think that we're going to see this in the next couple of weeks, we're going to see some long-term clarity in where tax policy is going to be, where spending policy is going to be. If we can then get to regulatory policy, I think we've got to start. So, that's what around the block. I think that, we now have the market at its lows. I think we're going to see until we have clarity that we're going to get a solution. I don't even think we need the solution. I think we need clarity that there's going to be a solution. The market's going to have a tough time getting back over 1,400. Once we have clarity of a solution, I think that will take off like a rocket ship into that. So, with that, David, do you have anything coming up in the next week or two that you want to promote?
No, I'm all for that taking off comment. I'm really looking forward to that myself. Don't have a whole lot of events coming up, but very much looking forward to my next live Twitter chat. Will be next Thursday.
There you go.
You can follow me at David S. Peltier. We'll be talking about it all next week. Help me out, Mark. What's Thursday?
Thursday is going to be the 15th.
The 15th. See, yeah, we've been living out of suitcases and going back and forth and working out of my friend and coworker's kitchen. So it's hard to keep track of what day it is. But so next Thursday, the 15th, it'll be 3:30 Central Time, 4:30 p.m. Eastern Time. This will be our 12th one, not quite the 1 year anniversary, but live Twitter chat. It's hashtag SU10chat. And these have been getting better and better each month. We usually have a couple dozen people follow. And this is your chance, whether or not you subscribe to the newsletter. This is an open forum. It's out in the public. Ask anything you want. It's very interactive. It's very fun. And even if it's not a stock I follow, a lot of the most active stocks in the market trade under $10. And I might not necessarily like them, but this is your chance to ask me newsletter what I don't talk about every day. Maybe it is your Groupon or your Zynga or your Bank of America or your coal stock. And I like it because it's interactive. People talk to each other. It's not just people asking me or me telling people what I want to talk about. It's a really neat forum and something we've really developed over the past year.
All right. And as I'm sure you know, David, on December 1st in Chicago and available online, me, Jim Bittman of the CBOE Options Institute, and yours and my good friend Jill Malandrino are going to be of thestreet.com. We're going to be having an event using volatility to improve directional trading. You can sign up at optionpit.com/events. I'll tell you, it's going to be a great all-day event. The early registration, it was originally going to be November 10th. We pushed it to December 1st because of what went on in New York. The early registration discount is until November 17th. I'll tell you, if you're not coming to this, you are missing out. And one of these days, David, you're going to have to come out to Chicago and visit us.
I was just going to threaten to maybe make a cameo. I'm not going to take away from the presentation. We'd love to have you out here, David. It'd be a blast. I've been to two of the previous presentations that Jill and Mark have done, and I have to say that not because I had to be there, because I wanted to be there, and these are really great classes. And you two are both really good teachers. I know that adding Jim to the mix will just make it even that much better. Yep. So, David, I can't thank you enough for coming on. And it was an absolute pleasure. Hopefully we'll have you on again, and we'll do this. You and I I'm sure we'll do a webinar sometime in the next month or so. And we want to thank all of our listeners for checking us out. If you want to catch our podcast, you can download it. Follow Mark on Twitter @options. You can follow me @optionpit. And until then, you can catch all of your news and information at theoptioninsider.com, optionpit.com, thestreet.com, and we'll see you next time on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.